Hello. Welcome to another edition of Selling Life and Annuities. I'm Tim Luby. I'm the National Sales Director for Annuities and Core Marketing. And with me today is my good friend and associate, Paul Bechtold. He's the Regional Vice President and Manager of Debt Elimination Programs for Gordon. And our topic today is in the client's best interest. So Paul, what is it? What's in the client's best interest?
Well, Tim, that's kind of a little bit of a play on words, a little tongue-in-cheek there. What I want to talk today about with our audience is interest working for us versus interest working against us, right? So obviously being in the debt arena, I deal with a lot of clients that have a lot of interest working against them, right? They're paying interest out. And I like to say it's a zero-sum game. At the end of the day, whether I eliminate the interest working against us by eliminating the debt or I grow somebody's wealth by making interest for them, the net effect's the same, right?
Right.
The beauty of our program is we can do both at the same time. But what I find is that the client likes to concentrate a lot more on the rate of return or the growth that they're getting in their investments, on their money, than they really are focused on or can even appreciate the interest that's working against them in their debt.
Okay. So you've got your program, Equity Excel. Does the program help illuminate the difference in these scenarios?
Absolutely does. And that was one of the big improvements we made when we went to Equity Excel, is that the software actually can calculate out on each debt what the effective interest rate is. So let me give you an example. Had a client this week that she had like a 5.675% interest rate on their mortgage. Okay, when I put the numbers in, I put the mortgage balance in, the interest rate, and what their principal and interest payment was. It showed that 92% plus of their principal and interest payment was going to interest. Okay, that's a big wake-up call.
Yeah.
Okay, that's usually a big wake-up call. And I like to say that clients are unaware in one of two ways when I show them that. They're unaware that it's A, even happening, but B, they're also unaware that they can do something about that.
Yeah. So it's funny, Paul, you are on another level with this stuff. There's a lot of math here. There's a lot of numbers. You're a numbers guy. This must get confusing for clients sometimes, though. They can't possibly be with you all the time. Like, are you with me? So how do you address that?
Well, to be honest about it, I just try to break it down to sixth grade math. I try to tell them up front it's not going to be any more difficult than sixth grade math. And if it ever is, make sure you stop and ask questions. So I want them to feel open and comfortable and free to challenge that at any time if they feel that they don't understand. Okay. A lot of what I do is educational in nature. It's an educational process. I want to take them through in baby steps. First, for example, we look at the mortgage. Then I usually shift into the consumer debts. Now, I just had another client this week as well that had over 12 student loans. Okay, we laid all those out into the software, calculated the debt payoff, but every one of those student loans was over 60%. Okay.
Yeah. So there's obviously a lot of math in here, a lot of, and you're simplifying them. Clearly, in many cases, it probably comes down to them placing their trust in you, that you've got their best interest.
Yeah, exactly.
Once again.
Yeah.
But what is it that captures? What is it that induces them to move on the debt elimination program that you're proposing?
Well, seeing is believing is a lot of it. Okay, when I enter their data that they shared with me into that debt program, and I can show them both the report, and then I can also go into the software and show them what those effective interest rates are. That's a lot of times that's the first time that they've ever seen that. They had no idea that that's even going on. So it's the wake-up call and just the common sense aspect of it. But the thing that really motivates them, Tim, is in most cases, we're able to eliminate people's debt in 9 or 10 years or less. And a lot of times the consumer debt is gone in as little as 2 years or less. So that's a very motivating thing. And that's something somebody can get on board with because they can see clear of 2 years down the road and maybe just having a mortgage as their only debt.
So you often talk about the fact that there are different things that you can do to address successful improvement in someone's retirement scenario. And I think what I understand is that you often see people very excited about investments and growing versus the debt elimination. So how do you bridge that gap? How do you address that? You obviously run into it all the time.
Yeah, you're right, I do. But you know how I address it? I address it head on. And I say, look, you've got, in the case of this couple, you've got 60% of each of these student loan payments going away. Can you think of a better place that you could put your money? And they'll agree readily, and I'll go, now, let's be sure about one thing. Paying off debt isn't nearly as sexy as growing wealth. Okay, if I said to you, we could grow your wealth by 60% today and put all your money over here, that'd be a much more exciting proposal. So sometimes you just have to kind of call it out for what it is, but you also want to kind of defragment them from the emotion of that. You want to say, don't let your emotions rule you. Okay, do what's going to mathematically and logically make more sense here, which is first let's eliminate the debt, and then let's take the freed up cash flow and go out and grow your wealth. And I'll mathematically prove that you're going to have a lot more.
So I've heard you say before that they need to sort of feel the pain to a degree. Am I right? So help me, explain that to us a little bit. What do you mean exactly by that? How do you get them to recognize the pain?
Well, when I show them the volume of interest working against them and how that's going in the bank's pocket instead of going into their pocket, and it's the first time that they've really been enlightened to that, that usually creates enough pain to motivate them to move forward to do something about it.
Right. So Equity XL actually does a little bit of both, right?
Correct, yes. There is an investment aspect of it. Now, like what I like to say to every one of my clients is I say, life insurance in and of itself is not meant to be an investment. Is there an investment aspect of it? Yes. Because we use guaranteed products that have a guaranteed interest rate plus a dividend that's paid out. But we're not buying it for that, okay? What we're buying it using life insurance for is this the best place to store and leverage their money and also protect against risk of all different types.
Excellent, yeah. So are there trade-offs on focusing on one over the other?
No, that's the beauty of the program. We really do three things simultaneously. We eliminate debt, we free up cash flow, and we build wealth all simultaneously on the same money.
Excellent. So for the benefit of those that are watching today, you're obviously very well prepared and couldn't be better versed on this stuff. So how do our advisors that are watching today that are interested in getting your help, how do they engage with you?
Well, I get a lot of emails, and you can email me directly at paulagordmarketing.com. I get a lot of phone calls as well. You can call me at 317-626-3054, available 24/7. Be glad to answer your questions. We'll set up a time. I'll send you an introductory email with some information, and we can set up a time to further educate you and get you involved in the program. But here's the best part. You don't have to know anything other than somebody that has debt that wants to get rid of it and get a little bit of financial information. I can show you how to be very successful right away.
Great. Well, thank you, Paul. So we're kind of winding down here on time. What a phenomenal resource that we have available to you and Paul that can help you in terms of what's in the client's best interest. Play on words. He's extremely well versed on this. But with that, thank you for joining us today. If you would, please do us a favor and subscribe to the link below. Hit the notification bell. And if you would be so good as to like, comment, and share, that'd be outstanding. But with that, thank you for joining us for what's in the client's best interest, and happy selling.